Update for the U.S. economy relative to PMIs as of May. PMIs are an indicator put out by a variety of firms. I track the ISM PMI for the U.S. I then look at market economics, which is also HSBC, or maybe it's changed. They seem to change hands every few months these days. I think it may now be called SP Global PMIs, but I still use the marketeconomics.com site to find that information, and market is spelled with an E rather than, with an I rather than an E. Okay, so what we have is this is the markets version of PMI, and we can see it's ticked down some, okay, for May relative to April. And what I'm using for this particular, what I think is that there is a possibility of, we've already found a minor long-term bottom. And here's what a minor long-term business cycle looks like, up and down. The problem is it can bottom anytime this year, possibly even early next. But it looks like it bottoms this year, and the PMI ought to be doing better next year, meaning the economy improves. And I think if it takes out this recent high, the high of this year, that's probably a sign of economic growth. But do not anticipate it to move up by huge amounts, because here's why. This is the financial crisis, a major long-term plus super cycles creating the Great Recession, the financial crisis, or related to it. Then we get this big explosion as we pull up out of the recession. Of course, we're printing money, we're trying to recover. And then it just stalls out while the economy grows. If we graph the economy, we'd be doing more like this, okay? And then it fell again for the next once a decade primary business cycle downturn, the bust of the boom bust cycle, the primary recession, okay? And of course, the stock market's usually down as well, so it's a significant bear market, okay? But I just want to point out the economy was growing through this entire range, and by some measurements even a faster pace. It was at record levels, but this indicator stalled out. Now we've had another recession, another big boom period. We're going through the bust, and we're now creating some of the bust of this minor long-term cycle. I shouldn't even, in fact, let me back up. It's not a bust. It's a correction of this decade boom bust cycle, okay? So this is just a phase. So over time, through the rest of this decade, we'll probably see this PMI come closer to 50, occasionally dipping below it, spending most of its time around 50 to 58, something like that, occasionally 60, and that's probably about it, okay? But the economy will move to record highs. The stock market's going to move to record highs. Some measurements may show the economy is even speeding up. Now, this PMI indicator has a very strong positive correlation to GDP, okay? So if GDP is going up, this indicator is usually going up, vice versa. So the point is, as this indicator stalls out, eventually what's going to happen is our percent GDP is also going to stall out and move lower, and it probably is already topped out and heading lower. I think for the decade, the percent GDP will be higher than some recent decades, a bit better, but it should back off some. I think inflation backs off more than the GDP, but it's probably going to be at an elevated level for the decade, an average for the decade, than in recent decades, but it should set back quite a bit. All of this allows for the economy to grow very well still, and allows the stock market to pound out record highs, in my opinion. But along the way, we're going to get these minor fluctuations. And there's even something more important than minor that's due mid to late decade, but it's not as important as that once a decade sell signal or bearish signal in the primary recession. So sometime this year, this is going to bottom, but what I want to warn you is it may not really bounce that well in coming years. It may actually continue to erode and work lower. But we're going to trigger something called a kitchen business cycle this year that's going to lead to another expansion of our economy next year. All right. Now, if we take that, the ISM PMI, I just showed you the market. The ISM PMI did not dip like the market version or the S&P global version as of May. It actually went up a little. 56.1 versus 55.1. So the economy actually sped up a little bit and May. But it's such a little difference, I wouldn't make a big deal out of it. It could be meaningless information. But this is an annual chart of the PMIs. We're simply taking what was the January PMI, that's the opening, what was the lowest and highest PMI per year, and what is the closing, which would be on the right-hand side of these candles that I'm using here, which is a type of charting, the closing of the year. In other words, what was the December PMI? And this gives us a range for the year. It gives us an indication what it generally did during the year. So here's our major once-a-decade juggler business cycle bottom, also called a 9-year. In the stock market, it's a bit different timing, but similar definition, and we call it an LT1, okay? And this is the business cycle for the PMI. Up, down, more sideways than down. The down were actually brief moments. You could argue economy-wise, it was actually up like this to that top and then down for the recession. And we can see how this works time and time again. It gets a little complicated in the 1930s to 1970s with inflation. But by the 1980s, we smoothed that cycle out because the way we're managing our economy relative to the Fed, government, but more so how we're behaving with our own data, consumers and businesses, okay? So the point is, last year I turned negative on the economy, saying it's time to pull the PMIs down and slow the pace of growth, but I'm not actually negative in the sense the economy falling backwards. For the economy to fall backwards, it has to go below 50. We haven't seen that yet. And if we're not due for that once-a-decade bearishness, sell signal, whatever, then a below 50 could very well be a buy the dip moment in the stock market and the economy and business in general. It will likely recover. So it's coming down, but this is still very strong PMIs. The economy is very strong. No evidence of the war on inflation hurting the economy. Now, will this allow the Fed to be even pound harder on inflation or even cause them? That may cause a problem for the stock market, and it may weaken the economy a bit more, but I'm not so sure it's actually going to destroy the economy. I'm not forecasting a recession at this time. It's already too late for a recession relative to how this juggler business cycle works. Now, you can have secondary recessions, mild recessions that could occur during a decade. They're just not as important, and they usually will not become an official recession by the government or the economists at large, okay? They'll either miss it or they just write it off saying it wasn't serious enough. When we see this trade back above the high of this year on this PMI, that could be a positive thing. And for the ISM PMI, if we see it trade above 58.6, and remember it's at 56.1 is May, that's probably a sign that we've gone through this lull, this setback, this correction this year. Things get better next year. Now, by taking that PMI, monthly PMI, throwing it in a formula, when it's above 50, we add it to the prior month. If it's at 50, we do nothing. And if it's below 50, we subtract it. We come up with this indicator. And this indicator shows us that decade economic boom bust. Boom, bust. Boom, bust. We're in a boom, and look, compared to the size of this trend and the size of this trend, we are early yet in the boom cycle. We have a long ways to go. This right today, this whole inflation stuff may create a more serious setback in the economy than we would normally expect, but it's not going to destroy the economy. We're probably not going into recession. The stock market may overreact to it, but it's not an end-of-world scenario. We're just shifting gears, making adjustments, sending money in different directions in the future to grow this economy, and that's all it is. Past results are not necessarily indicative of future results. Go to criticalpointpod.com, learn about myself, this modeling, some free stuff. There's some links to the website where we have all the free and subscription-based video audios that are coming out every day to a few times a week or month, that kind of stuff. Take a look at it. Get on board with this journey of all the twists and turns that are going to occur this decade, and so that we can be on board with the stock market and the economy. Thank you.